Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, December 7th, 2021. It is just about almost 10 o'clock Eastern Time as I'm starting the video. I told you guys in the first post I got out today that I'd post some charts under the comment section. I decided just to go ahead and do a video early because I wanted to point out where we are in the market. Not going to be in depth. I'm just going to cover some of the key developments and levels to watch, and then I want to do updates on some of the recently highlighted trade ideas. Somebody pointed out yesterday, I checked it, the part of the Bitcoin analysis was cut off in the video. I must have hit the pause button and then resumed it. Sometimes that'll happen during recording, so I'm going to do an update there. And I did post a couple charts under yesterday's post in the comment section, both ETCG and BRR, Bitcoin futures. So we're going to get on those, the cryptos, ETHE as well I'll cover. Then I'll roll into some of the commodities, corn, coffee, lumber, the 30-year treasury bond, and then finally those handful of not just communication stocks. On Friday I laid out several trade ideas, alongside trade ideas, so I'll do updates on all those. That's T-Mobile, Facebook, JD, PYPL, which is PayPal, Adobe, and Booking.com. So all right, let's dive in here. The single most, if I had to pick one development, now there's never any one thing in the markets, whether it's fundamental analysis or technical analysis. Technical analysis is charts. But if we're looking at technical analysis, which we are, that's what this video is about today, the single most important factor is so far, despite the fact that I had 4 total targets, near-term targets on QQQ, and the first 2 were hit, the second 2 haven't been hit, and I still think we might get another leg down. The most important thing is, so far, this is nothing more than a breakout and a back test. This is a daily chart, very significant. Yes, we have sell signals on the that we had recently on the daily that could be longer-term topping sticks, also on the weekly. But if you look at this daily chart and just look at price action, we had a breakout right here to new all-time highs and a successful back test so far, and a pretty impulsive bounce off that back test. You see the back test, they parked it on there on Friday, and again you can see they tested it in another successful defense of the breakout, and we're bouncing today. So here's the bottom line: until and unless we undercut those lows and this breakout fails, you can't make a strong case for a big leg down. Some of those deeper targets that I talked about, potential targets, again, those are still potential targets. We have to, first things first, we have to see if we get another leg down. And then I also talked about a pullback to this trend line in the 200-day MAs. I still think that's a decent possibility, but today is going to be pretty telling because we had this bounce. They're buying this, and what we need to see, what would really help. There's no absolutes in trading technical analysis, but we need to see this get faded. Today's gains, we're up 2.5% QQQ. Need to see the buyer step in, and ideally, they need to do it right about now. All right, so that is what's going on here. Now let's just talk about this bounce. I'm going to get to the 60-minute charts, and then we'll move on to those other securities. All right, one of the things going on right now is the bounce that we have is nothing more than a bounce off support. Remember, go down that 60-minute chart. We drop, we hit my second target, and we bounced. And look where we bounced to. We're at downtrend line resistance potential. That's why, again, ideally we need to see it reverse. I was really wanting to see Qs stay below that 390 level, and it would have been an objective short if we got there, but we gapped above it. So the next objective short is right there, and really this is the kind of the line in the sand. That is pretty big resistance there, about 401. You can see we had major reaction high there, kind of put in that left shoulder on the head and shoulders pattern, another major reaction there, the right shoulder, and so that, take that out. Look, again, anything's possible, but that would most likely open the door for new highs. Now, again, if we can come down here, then reverse now very soon, as I'm, where we're at when I'm doing this video, or slightly higher, close the next 60-minute candle on or below this trend line, and then start moving lower. That's great. And your targets, if you get that backfill, that'd be certainly a quick pullback target for you. And of course, swing traders could target T3 and T4, and then possibly even some of those longer term charts I've laid out on the daily chart. So again, this is where we need to turn down, ideally, not absolutely necessary, but ideally. And then when we look at this bounce, I put up Fibonacci retracements. That's you start at the highs, go to the recent lows, and we're right at, this is the 50% right here. You can see on the left it shows the percentages, and this is a 61.8. This is just a typical bounce back level in a counter trend rally. You know, you had first right there, you can see when I move it up there from the top, that first bounce was capped perfectly by the 61.8% Fibonacci retracement. Then we had another leg down, but this is the first. Those are just little minor waves, if you will. This is a little bit larger one. So I just want to say from that perspective, and this is still what I'm going off of based on everything I've been talking about for weeks now, the recent sell signals with the bearish engulfing candles, trendline breaks, divergences, and market breadth deterioration, etc., etc., etc. So I'm still going off that and leaning towards that other leg down. I know right now, if you were short and you rode out this counter trend bounce, I'm sure yesterday you weren't happy, and I'm positive today you're not happy. But again, I'm just showing you what I see. You guys decide what to do. I showed you levels where it really starts to sharply decrease the odds if we go above there, but right now we're not at that level where the odds are sharply decreased, because this is a counter trend, a typical counter trend rally so far. And also, I'm going to do this for you. I'm going to measure this rally right now. It's about 4%, 4.3%. So check this out. So we go out here to a daily chart. I'm going to turn off all these lines. All right, so we're at about a 4.3% bounce, just over the 50% fib retracement, still under the 61.8. Let's go back in time. So we had a bigger correction right here. There was a drop of about 8.5%, and you can see right there we had a rally that was. What I'm doing is I'm snapping the bottom of that candle. You can see the lines there. I'm measuring to the top, and the pop-up box on the left of the screen will show me that was 3.63%. So there was your initial leg down. You had a kickback rally halfway between. And that's a simple, you know, Elliott wavers call that an ABC corrective wave. It moves in three waves, A, B, C. But that was, and I put up the fibs. Well, hell, we'll just do that real quick. Put up the fibs, and I've got all other lines. That was right at the 61.8. I can see it there. You can see it there. So that was also a typical retracement right to the 61.8. But let's look for a little bit bigger correction too. This was one of the bigger ones we had so far over the last year or so. And I'm going to put up this board here. Let's see. Grab that. I'm going to measure that down. Yeah, that was a 12% drop. So what happened halfway? We went down here, we had a snapback rally, and I'm measuring it, and that was about 4.3%. So really no different so far. This first leg down, some consolidation there, and a bounce that went as high as about 4.3, took about a week, and then you get followed by another leg down for a drop of over 12%. And that would actually probably come right in line with my targets that I have on T3 and T4 if we get that other leg down. So just want to say there's no guarantee just because I'm showing you similarities, but I am showing you that what these counter trend rallies do once a correction starts is they they suck in some more longs, clear out shorts, and then you get the next leg down. And again, that was just an ABC correction, and that's all right now. Again, the official targets on this trade are only the maximum target's T4, which is just almost exactly what we're looking at there, something similar. And again, I'll make a decision whether to call in, maybe shorten those targets or extend those targets. That's often what I'll do on a trade if I can make the case for more downside. And then finally, last but not least, let me put up some fibs there for you as well. Fibonacci retracement levels, just so you can see here. We'll zoom in tight. I know it's hard to see on the video. Let's go right here, grab it. There we go. All right, so that one was a bounce, a retracement of 38 to the button right there. You can see the 38.2% minimum fib. When COVID hit back here, you had a drop on the first counter trend rally. You rallied right up. You can see it here. Hopefully you can see it in the video, and you can replicate this if not on your own chart. right to the 60, no, right between the 50% and 61.8 fib. And if you remember back there, and I'll show you some posts, we were short right here. We shorted, we had a sell signal, covered that short, hit the target there, and actually went reverse long, took a bounce trade long, and then we reshorted, and the notes are still here from that trade. Shorted it back here to 21.57, swung it all the way down here to 178. So we caught most of that big drop back when COVID hit. And again, because it was priced in the technicals, you had the similar technical posture in the charts. And again, what's the takeaway from this? That the rally over the last few days has been impulsive, and I am spending a little more time on the bearish case, but I have to again. I cannot continue to impress how important it is to realize that that bearish case may not play out, because right now, again, you have a back test and they're buying it pretty aggressively so far. That's, by the way, that's what a counter trend rally looks like. Usually it's pretty aggressive. You have a lot of short covering, a lot of dip buyers that come in thinking the worst is over. But at this point in time, it's nothing more than a typical counter trend rally, and we are still in. Make no mistake about it. Look at any chart you want, turn off all the lines if you will. Let me just turn these fibs off for now. It's a near-term downtrend at this point in time. You're still zigzagging lower. Once you take out these highs right here, that's where it really, like I said earlier on this other chart right there, it's the same level, about 401. It really just kind of chips away completely or destroys the case. Again, it doesn't guarantee a blast off to new highs and another 20% upside in the market, but it certainly increases the odds of another marginal new high, which would simply extend those divergences, and you may not want to ride that out. So all right, that's that. And here's some of those posts back from February of 2020 when COVID hit, and just show you we had shorts on QQQ. They were downside targets, and again they were initial downside targets, all of which were hit. The divergent high on the 60-minute chart of QQQ, 60-minute chart of SPY showing us going lower, IWM, and then covering and reversing those shorts to a long trade here, which kind of just went away. That's when things started falling off. But then that's that counter trend rally I showed you about, which we bounced to when we caught. And again, that was I showed you in the percentage terms. Fibonacci's do a better job. And that's the other takeaway too, is remember the initial leg down when COVID hit was very big and strong. So therefore, your counter trend rally, although it was the same, it was a typical counter trend bounce in percentage terms. That's what Fibonacci's help you tell you. It was between around the 50 to 61.8, but it was bigger in percentage terms. And then we got the next leg down, which was again, that's a little bit later. Once we covered that long after being short here, going long, and then shorted again, a new short entry at 21.57, and we swung it down. And I had a little bit more downside initially, but I revised and closed the short out early at 178. And QQQ bottom, that was within basis points of the bottom. It went a little bit lower, but a couple percentage points actually, not basis points, but I'm measuring it on another chart above 178 down to the closing low was about 170, almost 171, I think, in QQQ. So, all right, just to wrap it up and move on, that's where we're at. We have QQQ right now, 60-minute candle still going, but we're a little bit above that trend line. There's still resistance, but this is where, again, it doesn't help the bearish case, and it's really going to hurt it if that level's taken out. We'll have exceeded the 61.8 fib and then some. But we still have, by the way, again, we put in divergent low, as I mentioned, at support when targets were hit on both NQ and QQQ the other day. So there was certainly the case for a bounce to be made. And now the big question is it just a bounce trade with another leg down to come or not? Leaning that way, but I'll be less leaning that way, if that makes any sense, with each and every tick up from here, and each and every 60-minute candle close from here, and each and every resistance level that's taken out. So ES broke out. I gave you the downtrend line the other day. Put in a divergent low. Remember, it put in a divergent low there, and we had a pop, but then they sold it. And so far, they're buying this one. And it took out that 4662.59 level. I mentioned that this morning. And again, that's not good unless we can reverse here soon. So right now, I mentioned it as an objective short there this morning. I've maintained that, but we're past it, so I wouldn't add right now. I'd hold off. I'd want to see ES at this point in time the bearish case starting to chip away a little bit here. So I'd wait for it to fall back below there. Nice rejection. And then if you want just a short-term swing target, remember we hit the uptrend line on ES the other day when we put in that divergent low. So we could certainly have another leg down, test that. Even for the bullish case, if you want to say think we're going to new highs and this is a little too much too fast, but if we break that, which I still think we will, we're going to go lower. Okay, and Bitcoin. I mean, if you go back and on the site, you can anytime, below any post, click on the symbol tag. It says tagged, and you'll see all these past trades. This one is just, the major trends, swing trading. This has just been a beautiful trade, long and short on the site many times over the last several years actually. But shorted it there, hit the first target zone, second and final and third target zone there, reversed it to a long, caught that long, reversed it back short here, caught it, final target hit right there, went up here, and then again mentioned as a short right here at the divergent high, caught that biggest drop in many months there. Target was that, or minimum target I stated as 41.53, parked there on Friday, but as I mentioned, we gap below there on now. So here was what I wanted to talk about, because this video, the last video, this part got truncated. So we gap below it, which first of all, and I think I might have mentioned it in the video before it got cut off yesterday, kind of negated that whole long entry. Now we're extremely oversold, we bounced, but look, we bounced back to, remember, this was support. Had we opened that day, it would have provided an objective long entry, but we didn't. We gapped down. So now support, once broken, becomes resistance. And I don't see any divergence here on this daily chart, nor do I see it on the 60-minute charts. So my guess is I don't think it's over now. This tells me that that's pretty bearish price action, and I think this is a good time to re-short. Get back in. I know everybody's all out bullish because the crypto's been rallying hard for the last 2 days or so, just like the stock market. But I do suspect, no guarantees, but I suspect there'll be a more downside. And I can say, look, when I say it's an objective long or short entry on a trade, that means don't get married to it. You short it here, you short at resistance with a stop somewhat above. This is crypto, this is Bitcoin. So don't use a 1% stop, 2% stop on a security that goes up and down double digits in a single day, or you're going to get stopped out in the back-to-back noise. You need to use wider stops if you have larger price targets, and that'll keep you in the trade. 60-minute chart, there's that same level right there. Remember, it was that previous high there. We took it out, we broke it. I don't see divergence here. Almost divergence, but not quite on the RSI. But boom, bounce back to resistance. Also a gap backfill. So probably jog down. Objective short entry here. At the very least, come in, maybe try to backfill the gap, quick trade, or hold it down. I think there'll be another leg down. That's my guess, guys. Well, let me get to Bitcoin futures before. A lot of people like to trade the futures. Preferable, in my opinion, because they trade around the clock. That GBTC is over-the-counter security. It doesn't trade. I don't believe it has any pre-market or after-hour trade, so you're stuck in that one. And as you guys know, if you trade cryptos, they make big moves overnight, and that's why you can get clocked. You would have had your clock cleaned if you were long, to gap down big like it did on Monday. You can't do anything about it, whereas in futures, and the futures can gap down too because they shut down on Friday, open back up on Sunday, so I should take that back. But normally, Monday, and you can control that. You have an option to close your position out or reduce or hedge up come Friday, but Sunday through Friday, they're trading virtually around the clock. So, all right, where are we at? Here's my 2-hour candles chart. We had that divergent high there, and there was a correction. That's nice support right there. That's also a target where I think we can be heading again. This was divergent high right here, and we've been stair-stepping lower. That was the support that I covered on Friday. We parked it at, had an intraday overshoot parked there. We opened up Sunday night there. That would have been an objective long entry, but we didn't. We gapped down, so there was no entry on that trade. However, we're close to that level now, not all the way there. Let me make sure this chart's up to date. Should be, yeah. So that's it. So maybe a little more upside. Who knows? Maybe that's it. Maybe the whole correction's over, but I can say that's an objective short entry if you want to short it there. And I would do something like this, first target. We already hit, well, we'll call this again. That's a pretty big drop if we get back down to 47,490 again, 44,920, and then ultimately 41,601. And at that point, and I drew out a scenario on the chart I posted under yesterday's video in the comment section. If we did that, let's say we reverse zigzag down, it might look something like this. We don't have any divergence here on the 60-minute chart. Actually, this is a 120-minute chart, 2-hour candles. But same thing on the 60, we don't have divergence. But we could, if we get that, we could have nice positive divergence. And then I would be very interested in going long Bitcoin there at about 41,600. And I may never get it. Bitcoin may never look back, and so that it's a potential buy if it gets down there. It's also a potential area to cover a short as well. ETCG actually looks better than Bitcoin, and this is the old one. ETHG is a bit, Ethereum 2. I'll get to that one in a second. ETCG is the classic Ethereum, and you have support. I've had this line here, gosh, forever. Let's see, I created this line back in February 19th. And it's at 1733. There was a lot of reactions there in the past. That's why that line was there, still is. So we tagged it perfectly yesterday and had divergence in place. It's still not confirmed because we need to see this PPO turn up, but there's potential positive divergence. There's also a downtrend line, potential downtrend line. So this one, but however, let me just say this. It's bounced right back to resistance. Here's another line right there I hold. You can see I created that line also back on February 19th of 2021 because there were more reactions to the left, obviously, but it's acted as nice resistance. Look at all these reactions. 1, multiple reactions there. We'll call that 2 because that's a cluster. 3, 4. And then we broke it. Gap back above it. We've been trading, then multiple reactions there. So where am I going with it? Well, we bounced up to resistance, and the trend line's also resistance just overhead. So this one I think will also likely take another leg down, and it may set up. This divergence may continue to build, maybe goes all the way down here at $11. If it does, we'll look at the charts then and see. And if you think the correction's over, maybe it is, then you want to see a break above 2240 for your next objective entry and the downtrend line, and then you could target the same levels we were targeting before. I haven't touched those numbers. ETHE, this one, again, this looks toppy to me. This was big divergent high right there, right? How much did it fall? It fell a mere 85%. Next time we put in divergent high was right here. I'm going to measure it. I have to come over here so I don't move the lines, and we dropped 65%. We put in a small divergent high there, 35%. And then that was just DH1 in a series of divergences that continued to build. And then we had a nice trend line break here, and this created a bearish rising wedge. So therefore, bigger divergence, recent breakdown tells me we're probably headed quite a bit lower in Ethereum. So there's my analysis for you. Breakdown, beautiful sell signal on the breakdown of the wedge, double top high right there, really, and also a failed breakout above this previous high, so bull trap to boot. Came down, hit my first target there, 35.36, bounced, and we're bouncing back. Let me give you one more line now. This is the only line I haven't updated in a while. This one was back here from November 11th. And so you have really resistance zone up to those previous highs, about 47.31. And let me show you this. Even if we pop it, you're still going to have, if we pop it anytime soon, you're still going to have negative divergence. So you could make a marginal new high here and still head lower. Where's lower? Well, we already hit that target. That's my next one, 31.50 we'll call it. Let me round that off. Make it a nice round number. There it is, 31.50, 26.60. This one rounds off to the fourth digit, so 26.61. And then this trend line here. So those are your potential, let's just say my maximum near-term swing target. But I think this would be preferred. This is where if we get another leg down, that I'd swing to and probably be covering. Depends on if and when we get there and how the charts look. That'd be about another 35% downside from where we're at right now. And that is ETHE. All right, so you're up to speed on cryptos. Other than here's the actual coin right here, Ethereum crypto, ETH, and Okay, guys, somewhere along the line I just realized I hit the pause button because when I went to pause it, it unpaused it, if that makes any sense. So I don't know how long that happened, and I apologize. That's what happened yesterday. Sometimes the button, you click on it and it doesn't work, and I have to pay attention to the timer. Anyways, what I was saying, if hopefully I covered, you got the ETHE that I just covered. That's the Ethereum 2 ETF type instrument, but this is ETH, which is also the raw crypto 2-month hourly candles. And I mentioned the other day we had nice support here, which was hit when ETHE, or was it ETCG? One of the two hit my that downside target support level. We have support here as well, and this is resistance. So the point is we bounce back to resistance. We have several reactions there. It's a level I've had on this chart for a while. That's about 441, give or take. And so there's another objective short entry on Ethereum, with of course with the stop somewhat above. Somewhat above, well, you have the recent highs as well, and that's pretty big resistance as well. So it depends where you think it's going, if you do think it's going down at all. And then of course if it breaks 38.95, that's going to open the door for the next leg down, big leg down, I think. And an update on corn, ZC corn futures. Let me just focus on this chart now to keep this video not going too long. You can also trade the ETF CORN, the ETN technically. It's going to track corn futures, so it'll move with this one. This one, it's been a couple weeks at least. I can't recall if we shorted it first on this small divergent high. We only had divergence of the PPO, or this secondary sell signal. The divergence extended. Either way, here's where we're at now. There's our uptrend line, forms this wedge pattern here. We put in negative divergence. That divergence continued to extend. Then we had a sell signal here, and this one's just some kind of lollygagging around. It's really where, if this was the first short, or this one, we're back to where we started. But however, more recently, and this is why I want to do the update, we had a little snapback rally. It certainly seems to be toppy here. It's had a hard time getting through here, and we just actually put in a lower high so far, and we broke down. You can see on this 60-minute chart we had a little price channel here, right here, and also put in small divergent high right there, negative divergence, and then broke down, back tested, and we're starting to roll over. So I think we'll take another run down to that 57.5 level, and if and when we can break that, I know there's another reaction low there that has to be dealt with, but I think that'll open the door for that next target, which I believe is at my first target. And it is also my minimum swing target, 553. If things get ugly in corn, it may open the door for a bigger correction, maybe all the way down to 511. But that's corn. Still think it's going lower. Next one too is coffee, another commodity. You can trade JO, the ETN, or you can use this one, KC, coffee futures. And same thing too. It's also, we had a sell signal back here. We had a little trend line break, kickback, back test, marginal new high, secondary trend line break, impulsive that time around, and again another marginal new high. So what it's doing is it's been in a strong uptrend for a while. It's working its way higher, but we keep getting sell signals, and more importantly, these divergences are still very much intact. And we're right, maybe slightly underwater on this one, but here's what needs to happen. We already broke this minor trend line there, so there's a near-term sell signal. Support at 2.3985 needs to be taken out, and when it does, then this minor trend line needs to be taken out, and that should bring us back down all the way at least to 215. Quite likely more. I made the case for a pretty significant correction in coffee, even though it's in a strong bull trend. Trying to catch a top on that one. And again, I'll do updates here, and I'll also cover the daily chart if and when we get some downside traction on this, and continue to highlight the longer term targets. These are just near term targets here. And by the way, about an 18% drop, I think, if from here down to that 201-ish level there, that's a good 18% or so drop from where we're at right now. So plenty of meat on the bone, even for if the short-term targets are hit. Here's lumber. This one you can decide whether to do a intraday or a daily stop. You know, if again, if targeting down here, just that small target zone, I give you a stop level right here of about, and again, it's using a 3-to-1 RR down to there, about 948, which we're at 945 right now. So, you know, lumber futures, I always talk about this, are very thinly traded. There's big spreads between the bid and the ask, and so sometimes you'll get an opening fill. Like so far, it popped at the open on probably a single trade, but settled back down here just under that stop. And with thinly traded securities, especially like that, where a single fill on one trade could cause it to move up or down 3%. You might want to also give it on those. You might want to give them either a 1 or 2 hour candlestick close. This is a 2-hour chart, so these are 2-hour candles, or even a daily close. But the case is still there. But again, it's going to be largely dependent on what the stock market does. Because if the stock market just continues to run up after backtesting the recent breakout to new highs, that should be bullish for lumber as well. But you still have the negative divergences. They're just not confirmed. You can see this PPO flattening out. We need to see lumber come down, and then break of the trend line, and then that 867.71 level, and that should bring us down to the target zone. Otherwise, your next resistance is just overhead here. Pretty big one, about 1,002 or so on LB lumber futures. And ZB still flirting with those resistance. I'll show you TLT in a second. But we had this uptrend line here, negative divergence on the 60-minute time frame, just broke the trend line, and there's no hard support or resistance. We have a series of lower highs. In fact, let me show you on the 6-hour chart, which we're pretty much back testing. There's a minor downtrend line, not 6-hour. I'm sorry, 2-hour chart, 6-month candles. 2-hour candle, 6-month time period. So you had that downtrend line. So you have a breakout and a back test there, but you're still not above. You're right. You failed right at the previous reaction high. And the fact that we have negative divergence makes me think we'll probably, you know, the buyers are stepping in, buying the pullback to that trend line. But I think we'll come down here, especially if the market continues to rally. So it's still, I think, a good indirect or quasi hedge to any shorts in the market. Because to be short the market, if that position goes underwater because the stocks go up, you'll probably see the flight to safety bid come out of treasury bonds and a move back down. So let me just show you TLT, and then we'll wrap up with those individual stocks that I talked about. All right, TLT, here we go. This chart, TLT. This is a daily chart, and you can see we have the divergence. So again, we had pretty big resistance right here at about 152.60, give or take. Again, it's not a hard level. We popped it, but then failed back below it and did so with negative divergence. So I think TLT is going to come back down to probably the bottom of that range, about 146, and this intersecting uptrend line, that would be a swing target, or again, trade futures to get more bang for your buck. All right, last but not least, on Friday I laid out my favorite long trade ideas, and that included T-Mobile, TMUS. So the bounce so far from Friday's low, which is about where it was highlighted, give or take. I'm not exactly sure where we highlighted, but so far this one has rallied about 10%. Took out the downtrend line, triggering, you know, first it was a buy at support, then a break above the downtrend line. So it hit the second targets. That would be my max target at this point in time, and that's 124.54. That is another closer to 8% there. So T-Mobile looking good. Somebody else asked about AT&T, and I made a case. This one wasn't a hard buy. It was more, I made a case on a long-term weekly chart to maybe step in here. The other ones were more hard buys. This is more of a soft buy, if you will, because again, I can't make a strong case on the daily chart. I don't have support or really any other, you know, I don't have a bullish engulfing candle, anything else, any type of other candlestick reversal patterns. So again, that was someone else's, but maybe again, long-term case. Ooh, Comcast, I didn't see this today, down 5%. So this one was one of the ones mentioned the other day too, and it was a little above support. You can see right there, 48.31 was the support, and it bounced, tried to break out. There was the downtrend line, but look, there's another example of intraday candles. It just parked on it. Tried to break it intraday but failed, tried again and failed, and that's a failed breakout above the downtrend line, so we're probably going to come back down. But it is still, especially if the market's going to new highs, still one of the better looking long side trade ideas. Nice support zone down here. You can buy it down around here, and minimum target up there 54.58. And if the market's going to new highs, I don't see why this one isn't going to rally from here. So still one of the better looking sectors. These communication stocks. I also on Friday mentioned Facebook. It was my favorite FANG by far, and one of the top, I mentioned a half dozen long side stocks, and that one nice rally so far too on Facebook, up about 8%. Nothing but upside since Friday's lows where it was highlighted. And again, the reason for that was multiple. There was a big support here. That was a trading range right there, multi-month trading range, top of the trading range. It was a breakout, successful backtest 1, successful backtest 2, ran, and just like the stock market, it's coming back in to test its breakout once again, and so buyers are going to step in on pullbacks to support. And this is in large part why the stock market's rallying, because stocks like this, and again, this has been one of the better performing FANG stocks because we had an objective entry and one of the few that had nice strong bullish divergence. If they all had this, yeah, I would say this market's going a lot higher. But Facebook, again, was the best of the lot, in my opinion. Again, that's out of the market leading FANGs. JD, I mentioned this one on pullback to trendline support. It's bounced so far, nothing big. Not one of my favorites. Put in a divergent low here. But PayPal I like also, or liked on Friday, and still looks good. Could take one more jog down because it never fully hit my 174.27 support, but it came close enough, and I always talk about that. If you're eyeing this level, PayPal has been falling for a while now, and if you want to buy it 174.27, well, everybody sees that level, and if all eyes are on one level, the buyers may step in early. So far it's up today about 3.66%. So far so good. And I laid out my targets. Maximum target at this time, I'm going to lower this line a little. I had it at 227.17, but I'm going to put it right there, closer to the those reaction lows, about 224, we'll call it. And there's a big gap right there as well. So, well, again, my targets are 201.50, 216.50ish, and 230 or 224. Let's see, Adobe also mentioned as a top pick on Friday, off trendline and price support, and really nice. You had nice price support about 613.44 and uptrend line support, and so far this one is good for a bounce of about 8.6%. Ultimately, this is a pretty bearish looking chart, in my opinion. So here's a difference between long and short term analysis or expectations. I do think this one's going a lot lower in the coming months over the next year or so, but until then, this wedge needs a little more work, and then a break of this trend line, whether it comes soon or months from now, is going to be a longer term sell signal. It'll probably take Adobe back here to at least 526.65, and that's this multi-month trading range right there where it broke out back here. We'll come in for a back test at some point, especially based on these big divergences that continue to build. We had big divergent high right there. We had a big correction, but now we have even bigger divergence. So this is our trend line. We need and that price level, we need to break that to get us down there. But as far as where it goes now, I don't know. I don't have a lot of resistance. You just have these previous highs right there. You could target that. This wedge could work its way up higher. Just things like this. What I do, if you grab a stock at support, and it's especially if you do it for a long-term trade, a swing or trend trade, set a stop under and then periodically raise your stops. Let it run. It's hard to say how far this one's going to go before it breaks that trend line. And then finally, I think I covered them all, but booking BKNG. Booking.com I mentioned as a buy right here, objective long entry at the 2. That's actually rounded off 2060 support right there. Nice support. A lot of reactions recently. And what was that? Where was maybe it had already? Yeah, Friday it had already hit and bounced off that level a few days earlier. So here's where we were on Friday, but still nice pop so far, almost 10%. Oh, by the way, I'm going to give you one more target. I had 2372 up there, but we have a gap right there. Traders are going to look at that gap. We kissed it today, so that, I'll be honest with you, I wish I would have told you this earlier. Oh, no, we're close enough. What am I saying? I'd take profits there. We're probably going to pull back, even if we go higher. If we do, next target 2372. If you think the market's got a lot more upside, just hold it. But if you got any or all of that 9+% pop since Friday, why not take profits and run 9% in a few days? Turn around, recycle back in, do something else with the money. That would be my preference. Also, remember, this is just like Adobe and a lot of these, there are huge tops starting to be priced into the market, and a lot of these stocks, you can see it here on the weekly chart, the divergence, multi-month, almost year-long negative divergence across the board on all indicators, and it's a matter of when do we break down, and when we do, we're probably coming back to 1630. That would be from where we're at today, a drop of about 30%. But again, right now we just hit support. They're buying it just like the market. And so near term it's bullish, longer term it's bearish. Okay, I think I covered everything I set out to. We'll wrap it up here, get the video out to you guys, and I'll continue to post any updates that anything important that I see, especially with what the markets do today at the end of the day. This has been Randy Finney with Right Side of the Chart. Have a good one.